This is probably as bad as it gets right now. There's a literal bloodbath in the world of cryptocurrency as Bitcoin, aka digital gold, has fallen to just $35,000. Now, in most cases, people usually turn to whales at this stage and blame them for dumping all their holdings. Keep watching this video as we're about to tell you how Terra potentially dumped Bitcoin to $35,000. First up, a $1 billion dump. The Terra Foundation has found itself in quite some trouble as they're being blamed for Bitcoin's recent plunge from glory. It's basic demand and supply if you think about it. Now, of course, Bitcoin isn't that simple. It's like the prize of the crypto world. You can't call yourself a true investor if you don't have any Bitcoin in your wallet. And if you happen to have one whole Bitcoin, you're probably considered a huge success, provided you're not friends with whales. Anyway, we're going to get into the technical part in a bit. But to keep things really simple, let's just say Terra dumped more than $1 billion worth of Bitcoin in the market. Why they did it is a different story. But what basically happened was they took a whole billion off the market. That triggered paper hands and others who were overinvested to pull their funds out to prevent further losses, whilst Bitcoin pretty much slaughtered everything in its path. And that downward spiral ended up slashing off $200 billion off the market, along with dropping Bitcoin to a measly $35,000. It may sound like a lot, but a lot of people thought that Bitcoin would cross 100K this year. That's looking a little bit tough at this point, considering the fact that the market would need $200 billion to just return to its original level. So who's to blame for all this? Probably Terra. How time changes. Terra, the darling of the market a few months back, buying boatloads of Bitcoin, making the market seem bullish, has fallen from grace. There have been some rumors that holding company BlackRock and Citadel have some sort of role to play in manipulating the market, but we don't know yet for sure. So what really happened? Alright, so this is where it gets really interesting. The Terra Foundation has two crypto offerings. The first one, UST, is pegged at $1, mainly used to buy other assets. In other words, UST is a stablecoin. The second is Luna. And what's interesting about UST and Luna is that either one of them can be burned to make the other. Imagine this. Say one Luna was worth about $10. Now, since a UST is basically $1, you'd get 10 UST for burning one Luna. It works the other way around too. Burning 10 UST would get you one Luna. And sometimes, when the UST is really proud of being the biggest decentralized stablecoin, it'll even soar to heights of $1.50. That's when Luna holders simply mint and burn to get an extra 50% of UST. As more and more Luna holders start to do this, the supply of UST would increase, pulling its price back down from $1.50 to $1 near the original peg. Pretty neat, right? It's just basic economics. And the same if the price of UST fell to half a dollar. People would just burn their UST for Luna and double their money. But essentially, this would be reducing the supply of UST and in turn increase its price back to the original peg. Now, because the overall macro landscape of the market was pretty bad, Luna started to dip. This is where you should wear your thinking cap. As Luna dropped, everyone started to burn their UST to mint more Luna. Since there was more Luna in the market now, its price fell even lower. And since the price fell lower, people burned even more UST. In simple words, a spiral, and a really bad one. UST didn't just fall below the peg. The stablecoin wished its peg goodbye, got in the car, and moved to another city, far, far away from the peg. Now, this is where the $1.5 billion worth of Bitcoins come into play. The Terra Foundation tried to refloat the UST by selling all the Bitcoin it had in reserves, and that just put even more selling pressure on the BTC. So what seems like a mother of all dips is just the collapse of a stablecoin followed by a huge dump of Bitcoin. Is Terra to be blamed? They just tried to refloat the UST if you think about it. Maybe if the sellers didn't respond to the Luna dropping like that, UST wouldn't have fallen and Terra wouldn't have had to sell all its Bitcoin. To the rescue. You're probably wondering now, how is the market ever going to bounce back from this devastating dump? Well, crypto investors should consider themselves lucky because the market just might return to normal. We're not saying green, we're saying normal. At least two venture capitalist companies are rumored to be deeply invested in Luna, and since their original investment vanished into thin air, they'll be pumping even more liquidity to bring Luna back to its original level. And as that happens, UST will ultimately stabilize itself. Sounds super simple, right? It is, no doubt about it. But right now, you should buckle up and get ready for really long and dark nights ahead. It's going to be some time before we see green again. Next, in other related news, opportunity amidst chaos. As Bitcoin plummets to $35,000 and people literally lose their mind, some have managed to find an opportunity amidst all the chaos. Ever since El Salvador announced Bitcoin Bitcoin as a legal tender in the country, they've slowly but steadily managed to stock up a large amount of the digital gold. As everyone was going nuts over the market, El Salvador just bought 500 more Bitcoins at the price of $30,744 per coin. That makes their total Bitcoin holding to 2,301 coins. Not to mention what a strategic entry point that this is, El Salvador has probably reduced its average buying price a lot. The country's president, Nayib Bukele, announced the mega buy on Twitter and made some really happy emojis. Guess it's all about which side you're on. Everyone at Terra is probably really quiet. And if Bitcoin manages to return to $60,000, El Salvador will practically double its investment. And if it breaks 100K, there's going to be a lot of millionaires in the country. Crypto muggings. The UK is facing its latest crime wave, and this time around, criminals have combined their muscle power with digital know-how to seize mobile phones and steal digital assets. It doesn't sound strange at first. We're used to scams like that, online scams in particular. But how these muggings are happening is just bizarre. Like, one guy in the UK was approached by a group of people offering to sell him cocaine. For starters, you shouldn't be doing cocaine. But anyway, this guy followed the group of people in an alley where the deal was supposed to go down, but they ended up pushing him against the wall and transferring up to £6,000 worth of crypto from his account. Moral of the story, don't do drugs, kids. What's odd is that every story has something to do with drugs or alcohol. After a heavy night of drinking, one guy found himself all alone puking under a bridge. A few guys sneaked up behind him, made him unlock his phone, and took $28,000 in digital assets, including Ethereum and some RXP. It's pretty ironic. We've always been told to keep all of our seed phrases and passwords safe, but what if someone just takes our phone? $5.5 million fine. Famous tech company Nvidia has been slammed with a $5.5 million fine because of its failure to disclose cryptocurrency as a major source of revenue. It's even possible that one of you watching this video might have your own set of GPUs running overtime to mine some of that sweet passive income. But yeah, Nvidia was basically supposed to tell investors that the hike in GPUs was basically because of increased demand for crypto mining. We already know you can't mine on your laptop or regular desktop computer, so you need to build really strong rigs capable of processing complex equations to earn crypto as a reward. In purely technical terms, you're kind of verifying the network, and as a reward, you receive some part of the block you verified. Anyway, it's hard how investors weren't able to catch this earlier. Literally everyone knows why GPUs are more popular than ever these days. And the thing about mining is that one GPU barely cuts it. To build a somewhat good rig, you need at least 5 or 10 GPUs. And that's just for newbies or people starting off. There are literally mining farms with hundreds and thousands of GPUs working together to make some serious money in a matter of hours. That's it from our side, folks. So what do you think? Is Bitcoin going to take the entire 2022 just to recover? Or will we finally see the digital gold break its all-time high, considering how it's on sale now? Let us know what you think in the comments below. Remember, don't forget to like this video and subscribe to our channel for more exciting videos in the future. Thanks for watching, and see you next time.